Welcome to the deep dive. Today, we're jumping into the Colombo Stock Exchange, specifically the week of September 22nd to the 27th, 2025.
Yeah, and there's a really interesting puzzle here.
Right. The market itself looked, well, incredibly strong. The ASPI, the All-Share Price Index, was up 1.75% for the week.
Which pushed the year-to-date gain past, what, 35%? Pretty amazing.
Absolutely. And the S&P SL20 also closed higher every single day. Consistent gains.
But here's the kicker, the paradox you mentioned.
Exactly. While all this positive movement was happening, foreign investors, they were net sellers every single day.
So how does that work? How does the market climb so consistently when foreign money is heading out?
That's the mystery we need to unravel.
And the data, it points very clearly in one direction. If you look at the daily flows.
It's like a tale of two markets, isn't it?
Totally. Domestic net flow, positive every session. Foreign net flow, negative every session.
So the entire rally, the whole week's gains, it was all driven by local money.
Correct. Robust domestic confidence. Strong enough not just to participate, but to actually absorb all that foreign selling pressure and still push the market higher.
Wow. So locals were really bullish. That confidence has to come from somewhere, right? It's not just random optimism.
No, definitely not. It seems anchored in policy, specifically the Central Bank of Sri Lanka, the CBSL.
What did they do?
Well, interestingly, they didn't do anything drastic. They held the overnight policy rate steady, kept it at 7.75%.
Okay, holding steady. Why is that such a big deal? Doesn't sound very exciting.
But context is everything here.
Yeah.
For a while now, policy has been about, crisis mode, fighting fires.
Right, tackling inflation, stabilizing the economy.
Exactly, aggressive moves. So by holding the rate steady now, the market read that as a signal, a shift.
A shift towards what?
Towards supporting growth, moving away from just managing the crisis to actually enabling expansion, predictability.
I see. So a stable rate means businesses can plan better, banks know where they stand for lending.
Precisely. It gives local investors a clearer view of the path ahead, less uncertainty, more perceived opportunity for profit, especially in certain areas.
And you can see that reflected directly in the top performing sectors for the week, can't you?
Absolutely. Look at the winners. Financials up 4.2%, industrials gaining over 4%, materials climbing almost 2.8%.
Those are all sectors that really thrive on credit expansion, infrastructure development, that kind of long-term economic building.
They're betting on Sri Lanka's recovery and growth,
Yeah.
fueled by this perceived policy stability.
Was there anything else concrete bolstering that confidence?
Yeah, there was. The successful integration of the second phase of that big Sobatanavi LNG power plant. 350 megawatts.
The power plant going online. That's tangible progress.
Exactly. It's a concrete sign of infrastructure development moving forward, which supports that whole narrative. Good news for utilities, good news for the broader economy.
Okay, so the macro picture looks pretty positive. Stable policy, infrastructure wins, strong domestic buying. Does that mean it was smooth sailing for investors? No risk.
Oh, definitely not. That macro optimism can sometimes create, well, let's call it exuberance at the individual stock level. Meaning, while the main indices, the ASPI and SL20, look steady overall, if you drill down into specific stocks, particularly smaller ones, you saw some wild volatility.
We have a prime example of that from the sources, don't we? SMB Leasing.
Right. That stock tells a story. It pops up on the weekly top gainers list, jumping, what, over 33%?
Yeah, a huge spike. But then,
later that same week, it also appears on the top losers list, dropping 25%.
wow, up 33%, down 25% in the same week.
That's not fundamentals changing day by day. That's speculation. Likely retail investors chasing momentum, driving these huge swings. High risk.
So it's a really important lesson there. You have to differentiate.
Absolutely. You need to distinguish between, say, a company like Demo in the industrial sector, which is likely benefiting from the fundamental outlook for growth.
And these almost casino-like bets on smaller, potentially less stable stocks.
Exactly. Don't get caught up in the hype without checking the substance.
So wrapping this up, the key takeaway seems to be understand the policy backdrop because predictability matters a lot.
Yes. And critically, understand who is driving the market. Is it sustainable domestic confidence or maybe more fickle foreign flows? Or, in this case, domestic strength overcoming foreign exits?
Which brings us to a final thought, something to maybe mull over. S&P Global just upgraded Sri Lanka's sovereign credit rating to CCC plus C. That's, well, it's still low, but it's an upgrade, a positive signal.
It is. So given that positive nudge, why are foreign investors still selling? consistently?
That is the question, isn't it?
Is it just strategic profit-taking? Maybe they rode the initial wave driven by locals and are now cashing out.
Or are they waiting for something bigger, something more concrete on the international front?
Perhaps. Like those large-scale energy projects the minister mentioned, the LNG imports from India, which apparently might take 3 years to materialize.
So are they holding back serious long-term capital until those bigger pieces fall into place?
That's the calculation you're left with. What's the risk-reward balance for foreign capital right now? Something to keep watching.